One of the biggest reasons you will close late or you'll have home buyer's remorse is because you either did not receive or sign your loan estimate on time, or you did not receive or sign your closing disclosure on time, or you signed these documents not understanding what's going on. And so, listen, 1000% your lender should absolutely schedule time with you on these two documents. It does not take much time, 20 to 30 minutes, so that you have full clarity on something that you are going to feel day in and day out when you pay that mortgage. So I'm creating this video to bring that clarity in case you are working with another lender. And if not, when you are ready to purchase your next home, you guys know I'm here ready to lend. I would love to help you. So you guys know how I like to dive deep into detail. We are going over the loan estimate and closing disclosure in this video. Grab a paper, grab some pen, grab some paper, grab a pen. Let's go. So you just went under contract on the home you love, okay? Before we walk through this loan estimate and closing disclosure, we need to preface this by saying, honestly, the hard work should have been done already. The hard work as in the income documentation, the mortgage scenarios, the cost, the line item details, that is something that should take place at the time of the pre-approval. And one last thing before we walk through your loan estimate and closing disclosure, I want to give a 30-second blip on where do these documents fall within your mortgage process, just so we could tie this thing together. Now we need to begin the formal mortgage process, which means we are going to send you your initial disclosures electronically, okay? Initial disclosures is a 30 to 40 page document filled with state and federal mandated documents, which also includes your loan estimate. You cannot go to the next stage unless you sign those documents, right? The next stage includes ordering appraisal, ordering title, ordering your homeowner's insurance, submitting your file into underwriting, getting the underwriting approval, then sending you your closing disclosure, then clearing your underwriting conditions, then sending your loan to funding, aka the closing table. Let's take a look at this loan estimate. And let me preface this by saying a loan estimate is just that. Why? Because at this stage, we must intelligently estimate some of the costs on your loan. Now, of course, we know the lender cost, but we don't know things like the cost of your homeowner's insurance, the cost of title, where the seller is on property taxes. We don't know exactly how much the recording fees are going to cost. Now, listen, I'm the type where I like to conservatively estimate things. If I tell you at the very beginning of your mortgage process, you may need to bring 70 grand to the closing table. I'd rather, when updated costs come in, okay, if your total costs end up being 66,000 and I told you at the beginning you need 70 grand, I can live with that. It is easier to deliver good news than bad news. It is easier to do that versus saying, oh yeah, girl, no, you only need 66. And then I come back and I'm like, oh, actually you need 70. And now don't get me wrong, because I'm not going to, I use discretion. So I don't want to shoot myself in the foot and say, oh no, you need 70 grand. And then it ends up being only 55, because then that just will scare you away. That's number one. But also the flip side is I want you guys to be aware that there are some lenders who will oversell you, which they will underestimate costs. So they'll say, like I mentioned, they'll say, oh, you only need 55, and then have you commit to them, all to realize that your cash to close is much higher. So let's take a look at this sample loan estimate, okay? It has a date issued, it has an applicant's name, the subject property, loan term, 30-year purchase, fixed rate, conventional mortgage, loan ID number, rate lock, yes. At the time of this, when this disclosure went out, okay, there's a chance that your rate will be locked and there's a chance that it won't be locked. This one was, so emphasis on that, because if there's a cost to your rate, it will not appear until you lock your rate, okay? Just so you can compare apples to apples. Loan amount, $269. Can this amount increase after closing? No. Interest rate, 6.875. Principal and interest, $1,770. Does this loan have these features? Prepayment penalty? No. No balloon payment. You take the 1770, there's no mortgage insurance, then the 776 in estimated escrow. That brings your mortgage total to 2546. How is that 776 made up? The 776 includes property taxes and homeowners insurance. That brings your closing costs to $19,817. Estimated cash to close $120,000. So let's see how this $19,000 break down, okay? Now, you see all these boxes, A, B, C, D, etc. The total closing cost of $19,000. Let's see how that rolls up. Now, the first thing I want to say is your lender only controls box A, and they have partial control over box B. All the other items we do not control, and I have to emphasize that because especially if you're in areas where the transfer taxes, for example, are significantly high, places like Delaware, which is known for very low property taxes. However, when you purchase a home there, especially considering which county, a $600,000 home can easily have $18,000 in transfer taxes. So do not be alarmed, especially towards your lender, if you see estimated closing costs of some large amount, because it could very well be something that your lender does not control. Okay. So box A, this has 1.975% in loan in 1.975% of loan amount parentheses points. That is always going to indicate discount points. And you guys know discount points is no discount to you. It is the cost of the rate. Okay? You will only see discount points if discount points are applicable to you. In this sense, this was a bank statement loan. Okay? If discount points are applicable to you, you will only see that when your rate is locked. So going back to the whole comparing apples to apples thing. Application fee, compliance fee, then there's an appraisal fee, credit report fee, flood cert, rental survey, tax service, VOE fee, okay? Then section C is always going to be your title costs, okay? Section E, recording fees, transfer taxes. Section F, prepaids, your prepaid homeowners insurance, or if there's mortgage insurance, prepaid interest, or if you have to prepay property taxes. Then section G is the escrow for homeowners insurance, if there's an escrow for property taxes or mortgage insurance. Then there is owner's title insurance section, okay? That brings you to the $19,817. Plus, this person is doing a $115,000 down payment. So we have to add that to the 19. Then we are subtracting the $15,000 earnest money deposit. So typically at the signing of your contract, you are going to give some type of deposit. At contract signing, you may give one at the middle. However, you see that number is being subtracted. So I have to emphasize the deposit piece because one or two people a year, they're like, well, if the cash to close is $100,000 and they give 15, they say, well, I only have to bring 85,000. No, it's already being accounted for. So the biggest takeaway in the estimated cash to close, no matter how much you put on your deposit, it is already being accounted for. Your estimated cash to close is the number you are bringing to the closing table. No more, no less. Okay? Then we scroll on down to the third page. It has your lender information. It has the total amount that you will have paid in principal, interest, mortgage insurance, and loan costs in 5 years, how much principal you would have paid off, etc. And then it has other considerations about the appraisal, if the loan can be assumed, the requirement of homeowners insurance, and if we intend to service or transfer your loan. That, my friends, is your loan estimate. Now, let me add that before we go on to the closing disclosure, Because someone out there may be saying, okay, well, man, do I have to wait all the way to the end of the process to know the updated costs? No. So it is federal guidelines for us to issue you revised disclosures, revised loan estimates, anytime there are key changes made to the cost of your loan. Key changes to your loan is locking your interest rate, changing your down payment, or receiving the appraised value. And if there's a X amount of move in your APR, those are reasons why we would issue you a revised loan estimate. That way, you're not going, if you're in a 4-week contract, if you're in a 6-week contract, you're not literally going 5 weeks with no clue on what's going on. The closing disclosure is so important. And I know my realtor friends, I apologize if you guys work with a bad lender who does not get your closing disclosure out on time, because you guys, for example, if you are closing on a Friday, okay, if you are closing on a Friday and your lender does not send you your closing disclosure by Tuesday, and you have to sign it, you can open it, they can send it to you, and you can open it or not open it. But if you do not sign it, you are not closing by Friday. Everything could be done with your loan. Okay? You followed every step. If you do not sign that closing disclosure, you're not closing. Date issued 8/21, closing date 9/5. At the settlement agent, it'll have your title person, your title company on there, subject property, sales price, borrower, seller, lender, 30-year purchase, fixed rate, conventional mortgage. The loan amount is $269. Interest rate 6.875. That gives you principal and interest of $1770. Does this loan have a prepayment penalty or balloon payment? No. You take that $1770 plus your estimated escrow of $937. That gives you a mortgage payment of $2707. The $937 includes property taxes and homeowners insurance. Now, that other box right there, if you had an HOA, that would be checked. Okay. However, HOA is never included in your escrow. For example, the people who are in Florida, where the HOA is easily $500 a month, $900, $2,200 a month, you have to make sure that if there was an HOA, it would be that $2707 plus your $500 HOA fee. And so now we have closing costs of $17,000. Cash to close is $117,000. Let's scroll to the next page. Closing cost details. Let's see how this breaks down. Okay, the $17,000. The rate was locked at the very beginning of the loan. Okay, so this box has not changed. And actually, let me call out the fact of now on the closing disclosure, you have borrower paid section, seller paid by others. Okay, that's self-explanatory. Then you have under the borrower paid section, we have at closing or before closing. At closing, of course, is the dollars that you have to bring to the closing table. If a number is listed under before closing, that means you already paid for that, and we do not want to double count that. So, for example, you see the appraisal fee, the $555, you already paid that at the very beginning of the transaction. But then we have the credit report, flood cert, the tax service fee, VOE fee. Then we have updated title costs, $2202. We have recording fees of $476, and the transfer tax is this deal is in New Jersey. The transfer taxes are customarily paid by the seller, so the transfer tax is now on the seller side. Then we have prepaid homeowners insurance, $1,800. Prepaid interest because of the time you're closing, that's fine. Then we have an escrow of 3 months for homeowners insurance and an escrow for 4 months of property taxes. There's an adjustment of $300. Title owner's title insurance is $861 from the title company. Let's scroll on down. Calculating cash to close. Now, this section was not on the loan estimate, and I like this section because it shows you, what did your lender say at the beginning, and then how are we ending this thing? So our final costs show a total closing cost of $17,000. Then we are subtracting $555, which it says you paid these closing costs before closing. That was the appraisal fee that you paid. Then we're adding the $115,000 down payment. We are subtracting the $15,000 deposit. That leaves you with $117,000 in cash to close. Okay, let's scroll on down. Borrower's transaction, Section K, due from borrower at closing. So due from the borrower is $401,000. What makes up that? $385 in the sales price plus closing costs of $16,000. Okay, scroll on down to Section L, paid already by or on behalf of borrower at closing. So what was already paid was a $15,000 deposit, plus the bank is giving a $269,000 loan amount. You take that $401 total that is due minus what's being paid, which is the $284. That leaves you with the borrower having to bring $117,000. That, my friends, is how you read your closing disclosure. Same thing with the next page about loan assumptions, demand features. No, this does not have a demand feature. No, this loan does not have negative amortization, etc., etc. So that is how you read your closing disclosure. And like I said, I hope your lender is scheduling time for you to review your loan estimate and your closing disclosure with you. It does not take long, and I swear it takes so many guessing and questions out of this whole process. So I hope this video was helpful to you. If it was, make sure you guys hit the like button, hit the subscribe button, share this video with a friend.